Hey everybody, this is Jim at SP500chart.com. It's about 4:15 on June 24th, 2014. We're going to take a look at the S&P chart after I remind you that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy who draws lines on charts. So let's take a look. Starting out here on a 1 hour chart, you can see we've got a pretty decent red candle for the day today. Started out not too bad, got a little gains, but then fairly quickly started to give that back, and I think we ended up on the day with roughly a high of about 1968 and closed near the low around 1948 or 49. Actually, the close 1950, but we did a little bounce at around 48. So that's about a 20-point swing within what appears to be about 5 hours. Now, if we put this in context, what I want you to see are these two lines right here. And the reason we're looking at these lines, and this one perhaps, this one is a very light green line. I'm going to make these a little darker because I believe these might actually be the things that are more beneficial from this point on. Because if we don't get a bounce on this little line right here, and remember this line is kind of funky because it doesn't have a whole bunch of touches lately. I'm keeping it on the chart only because I guess because I can, but I'm thinking more than likely we come down and we tag one of our this lower support line this lower support line right here. Now, I mentioned that when you are looking at an inverted head and shoulders pattern, when this is our neckline, that there are three places where, according to John McGee, you place the trade. The first is on a return to the neckline. Okay? And you do this on the first of these three things that happen. And keep in mind that these patterns have different shapes. So these three things sometimes are line up in a very different way than they've lined up here. Okay? So return to the neckline. Okay? A return to the trend line drawn from the bottom of the head to the bottom of the right shoulder. Well, that's currently above the neckline. Okay? So we no longer look at the neckline as a buy signal. If we were to bust through these lines, then we would look for that as support. But when you trade, quote, according to the book, you would wait for this, or the 40% retracement, which is from the start, from the bottom of the right shoulder to the end of the breakout move. So here was the end of the breakout move. Here's the bottom of the right shoulder. This is the 40% retracement mark. So because of where we are right now, we can pretty much get rid of that 40% retracement. But I'm going to keep it on the chart just because in case we go plowing through things, this is another potential area of support. So right now, I think a tag at some point on this lower line would not surprise me one bit. So especially with what we saw today. Now again, you can see our little light green line right here. Pretty much seems to have stopped the selling today, but the question remains, will it stop any follow-through selling tomorrow? We also had a short-term line on this chart, this gray line right here. Let me adjust that again, which was running right here. You can see we plowed through that. I'm still going to leave this on the chart, however, because if we get a bounce, and let me move that line where it should be right there, because if we get a bounce here, we likely would be seeing this line then serve as resistance. Remember, support, once broken, turns into resistance typically, and resistance, once broken, turns into support. One of the reasons I'm not particularly fond of putting a lot of stock in this line here is because for almost a week we traded mostly below it, and then we got back over it again, so that kind of casts a little suspicion on this. Instead, I would be looking for frankly, it would not surprise me to see us sell off another 20-25 points over the next few days, and well, actually, I mean, if it happens tomorrow, if we were to get down to this line tomorrow, it would be more than 20 or 25 points. But I'm thinking we don't get down there in one fell swoop. I sort of see us eventually coming back down to test this support line right here. And that's just a hunch. It's based upon the fact that we have a pretty well-defined channel here, actually starting here, touch, 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 failure to touch. It only makes sense to me that we should be coming back down to this line, and because of the trading rules, as we have discussed, that is a line that very often does get tagged, and that's why that has become one of those kind of tried and true trading tendencies. So guys, like I said, maybe a little support here. I'm not really counting on it. If we get down underneath this, then I'm thinking there's a good chance we tag this line. There's only one thing I want to throw out that could also be a potential saving grace, and that would be the fact that we had this big move up on Fed Day back on the 18th. Maybe we get a little support if we get it down into this area right here, because this essentially could act, even though it's not a gap, it could act something as a gap, because this was a swift move and it may have left some people in the dust. So if we get down to say the mid 1940s, there may be a chance. There may be a chance that we could bounce here and then start to head back up. But if that doesn't happen, then I think we've got a very solid chance of support down here on this bottom line that I just pointed out. So there's your chart as of the close on June 24th, 2014. Kind of an ugly day, but you know, we had a nice little run here. We've had a very nice run off of the 1860s. That's been almost straight up, a little sideways, up again, just giving up a little bit more. I do not think I'm taking that 1990 off the table. Keeping that there because the pattern's still there, and we have yet to set a new low. As I mentioned in yesterday's video, what it would take for me to be concerned about that 1990 would be that we set a low and a close under our previous low back in the second week of June, and that would be at about 1926. So if we take 1926 out, then that might be cause for concern. So there you have it. It is what it is. I think we've got some support lines that we need to keep an eye on. We all knew there would be a day coming when we would give up some of these gains, and it looks like we may be starting that process today. So look, guys, thanks for watching. Take care.